Aussie dollar's another one where looked at this morning. Liked the setup as far as like the candlestick setup that's happening here. Like, I love this. This is a very juicy move. We've got high momentum move down. We've got momentum slowing with this candle. You've got an inside bar. You've got one last kind of attempt at pushing lower, and then a higher high, higher close. This is a delicious buy. The one problem is, right, you guys can see the green line there. What do you think the one problem is for me with this absolutely delicious buy? The problem is we broke and closed below structure. And that's where the dumb rules come into play. Where it's like, I like this a lot. Again, I really like this move. I like the fact that we stalled. This is kind of the fake, Orsi would call this the fake. It's not technically a fake inside bar break because it's a fake inside bar break. Which yesterday we spoke to Bud about the book Street Smarts. That was another strategy in the book Street Smarts they used, was not just inside bars, but the fake break. So inside bars, if you guys aren't familiar, are bars that completely within the previous bar, called the mother bar, right? So this is the range of the previous bar. The bar completes right in here. And an inside bar tells us what? Well, it tells us that consolidation, right? Because the range is getting smaller. So what you look for is to break one way or the other. And ideally, once price action breaks that way, it's no different than breaking out of consolidation, right? Just like the high and tight flags or low and tight flags we see. Now, one of the strategies was inside bar fakie break, where price action fakes a break one way and then actually has a break the opposite way. And what you would do is you would buy this way out of the normal break, and then you would get out of your buy, but then sell the opposite direction. And that's exactly what happened here, right? You can see price action. Here's our inside bar. Fake break to the downside. Immediately came right back to the upside. Boom, that's your buy. The problem with this one is that it came after a break and close below structure. And if we're going through our rules of break below, close below, give me 1 second. If we're going through our rules of break below, close below, identify, predict, decide, execute, I can't take along here because of the violation of structure. So that is the problem, and that's where sometimes analysis gets in your way. Sometimes analysis gets in your way, but we spoke about filters yesterday, and you add filters and whatnot to filter out most of the, well, not most, well, more of the bad and less of the good. But we talked about how some good's going to get caught in there. Well, filters are the same way here with rules, where it's important to understand that the market doesn't care about our rules, right? I hope everyone realizes that. Like, we can have rules, but the market can care less about them because the market does what it wants when it wants. Our rules are meant to keep us in the best case scenarios. But sometimes we're going to have beautiful, delicious setups in the market that don't obey our rules. That's just part of some of the good getting caught in the filter. And in those situations, we have two choices. We can either conform to our rules and do what we're supposed to do, or we can break our rules. And for me, I always think big picture. I think of, if I break my rules, that is like a bad habit. I don't know if any of you guys have ever had a bad habit that you had to break and you've done a good job of breaking it, or very similar like people that are alcoholics, right? Where you may be sober for years and you may be like, I've been sober for years. I've got control of this thing. I'm just going to have one drink. And then one drink leads you. That's all it takes is one drink. And it puts you right back in the situation you were in before. So I look at rules as being the same way, where it's like, we may tell ourselves that I'm going to break them this one time. just for this particular setup, but never again. You say that until you actually do it. And then when you do it, you realize that, well, now you've restarted this habit of breaking rules because you think you know more than the market, especially if this thing wins, right? If you break it and it wins, now you're even more inclined to break your rules again. So it stinks sometimes, but you got to think process over outcome. You got to think bigger picture. My rules are in place to help me much more than they're going to hurt me. So that kind of stinks that we did that because this is a nice setup. But if you don't have those rules, this can be an at-market trade for you right now. You could also look for a double bottom, something like that. 26.18 would be something that I could take advantage of. We go down to lower time frame. It's going to look suspiciously like everything else we looked at today. But good example of an inside bar fake break here. Now, target-wise, if you are looking for longs, right, the initial level that stands out to me is right here. This is going to be our most recent level. We can equip that with a 618, right? Shaboing. We have a psychological number in there, 67 even as well. Let's see if there's anything looking left that we need to pay attention to. We have these other inside levels of structure here, here, here. Or this is the same one. Now, remember the conversations we had, I don't know if it was here or probably in our Q&As about, well, definitely was one of our Q&As. You can go back through the Q&A archives. We did a great lesson probably a few months ago, I want to say, about a trader who was getting kind of analysis paralysis because he was identifying every single level of structure. We have to remember that, one, what's more important, inside structure or outside structure? Outside structure is going to be more important. Also, we want to have a recency bias in the market. So current levels of structure that have proven to be held or broken are going to be more valuable than past levels of structure, especially when it comes to inside levels of structure, because those are the structure levels that have been violated. So we can look at these inside levels of structure back here, and they had no effect on anything that happened. The only one that had an effect was right here where the market stalled. Therefore, this is going to be the one that's going to give us the importance. So you've got a really solid trading opportunity. If we get to our thingy thing, I always lose where it's at. A really solid trading opportunity. Again, if you buy right here on the aggressive higher high, higher close or inside bar fake break, you're looking for a move right under 67 even. Stop loss would be about 65, 67, 57, 47, 42s. That sounds about right. 42s. Yep. About 42s. Somewhere around there. That's not a bad risk profile for you. Not a bad risk profile at all. Bobby said I had this the same, so annoying that the lower low, lower close, but like you said, rules are important. Yeah. I looked at this morning, I started licking my lips, and then I always do like a rough structure line. I'm like, oh yeah, we held, looks like we held, just like the eye test. And then I go down and I actually measure it out and I'm like, mother boo. My wife's like, shh, you're waking the kids up. I'm like, sorry. Good trades don't come that often, babe. Just take the trade. I can't. Process over outcome. And she's like, you're gonna be on the. She shouldn't be like, if the process, if you keep yelling this early in the morning, the outcome's gonna be you sleeping on the couch tomorrow. I said, okay, I'll be quiet. Zip it. Zip it. Process over outcome works in your relationships as well. See? Hope you guys found value out of the video today. If you did, do me a favor, hit that like button before heading out. Also, if you're serious about becoming a successful trader, make sure you check out our website, www.tier1trading.com. There's all types of content on there that will help push you along that path. Lastly, if you're into the audio stuff, make sure you check out my podcast. It's called the Trading Coach Podcast. It comes out 3 times a week and it's available on your favorite podcasting app. I would challenge you to take the 10-episode challenge. That means pick 10 episodes of your choosing. And well, hopefully you enjoy it and it becomes a part of your regular routine.